You work hard for your money, but is your money working hard for you? It's time to think about your future, and I mean really think about it. What are your dreams? A new home, early retirement, giving your family the world? These dreams don't have to be distant fantasies. They can be your reality. The first step is taking control of your finances, and that starts with investing. Now, I know what you might be thinking. Investing is risky and complicated, but let me tell you, it doesn't have to be. With a systematic investment plan, or SIP, you can start growing your wealth with small, regular investments. It's like planting a seed. Over time, with consistent nurturing, it grows into a strong and fruitful tree. In this video, I'm going to hold your hand and guide you through every step of starting your very own SIP. We'll break down complex jargon into simple terms because knowledge is power, especially when it comes to your money. Remember, your financial destiny is in your hands, and the journey to financial freedom begins with a single step. Before you even think about investing a single dollar, we need to talk about your why. Why are you doing this? What are you hoping to achieve? Those dreams I talked about earlier, those are your financial goals. Maybe you're dreaming of a comfortable retirement, traveling the world without worrying about money. Or maybe you want to secure your children's education, giving them the gift of a bright future. It could be buying your dream home, starting your own business, or simply having a safety net for unexpected expenses. Whatever your goals are, write them down, make them specific, and give them a deadline. Remember, a goal without a plan is just a wish. Having clear financial goals will not only motivate you, but also guide your investment decisions every step of the way. Trust me, knowing where you're going makes the journey a whole lot smoother. Now that you know where you want to go, it's time to figure out how fast you want to get there. This is where risk tolerance comes in. Think of it like this. Are you the type of person who enjoys a thrilling roller coaster ride, or do you prefer a leisurely boat trip? Your risk tolerance refers to how comfortable you are with the possibility of your investments going up and down in value. If you're young and saving for a long-term goal like retirement, you might be more comfortable with a higher risk tolerance, like investing in equity funds. These funds invest in the stock market, which can be volatile, but also offer the potential for higher returns over the long run. On the other hand, if you're closer to retirement or have a lower risk tolerance, you might prefer debt funds. These funds invest in fixed income securities like bonds, which are generally less risky but may offer moderate returns. Remember, there's no right or wrong answer here. It's about finding what aligns with your individual circumstances and comfort level. Think of mutual funds like a basket of stocks or bonds. Instead of putting all your eggs in one basket, mutual funds allow you to invest in a diversified portfolio of assets, spreading your risk. But with so many mutual funds out there, choosing the right one can feel like navigating a jungle. Don't worry, I'm here to be your guide. Start by looking at the fund's performance track record. Has it consistently outperformed its benchmark over the long term? Next, check out the fund manager's experience and reputation. Are they skilled captains of the financial ship? Don't forget to consider the expense ratio, the fees charged by the fund house. Lower expenses mean more money in your pocket. Finally, ensure the fund's investment style aligns with your risk tolerance and financial goals. Remember, it's like choosing a travel companion. You want someone who's reliable, trustworthy, and shares your destination in mind. Now that you've got your financial goals, risk tolerance, and mutual fund selection sorted, it's time to open the doors to your financial future, your investment account. Think of it as your personal vault, where your money will grow and multiply. Opening an investment account is easier than you might think. You'll need a few essential documents like your PAN card, address proof, and bank account details. You can choose to open an account with a bank, a brokerage firm, or even online platforms. Each option has its pros and cons, so do your research and compare fees, features, and customer support before making a decision. It's like choosing the right soil for your financial seed to blossom. Before you start investing, you'll need to complete a mandatory process called KYC, which stands for Know Your Customer. Don't worry, it's not as intimidating as it sounds. KYC is a one-time process that helps financial institutions verify your identity and prevent fraud. The good news is that KYC can now be completed entirely online through eKYC, making it quicker and more convenient. You'll need to provide your PAN card, Aadhaar card, and a few other details, and voila! You're one step closer to embarking on your investment journey. Think of KYC as getting your passport stamped for entry into the exciting world of investing. Here's where the magic of SIPs truly shines. With SIPs, you don't need a lump sum amount to start investing. You can begin with small, regular investments that fit your budget. It's like watering your financial seed consistently, allowing it to grow steadily over time. Decide on an investment amount that you're comfortable with, even if it's a small sum initially. The key is consistency. You can choose to invest monthly, quarterly, or even weekly, depending on your cash flow and preference. Remember, it's not about timing the market. It's about time in the market. By investing regularly through SIPs, you benefit from rupee cost averaging, which means you buy more units when the market is down and fewer units when the market is up, averaging out your investment cost over time. You've set your financial goals, chosen your mutual funds, and decided on your SIP amount and frequency. Now let's automate the entire process so that investing becomes as effortless as breathing. Most banks and online platforms offer the convenience of auto debit. This means that your chosen SIP amount will be automatically deducted from your bank account on your chosen date and invested in your selected mutual fund. Automating your investments not only ensures discipline, but also helps you avoid missing out on investment opportunities due to procrastination or forgetfulness. It's like setting your financial journey on autopilot, allowing you to sit back, relax, and watch your wealth grow. Congratulations! You've now taken the first step towards securing your financial future. Remember, starting a SIP is not just about investing money. It's about investing in yourself, your dreams, and your future. Don't let fear or procrastination hold you back. Every journey starts with a single step, and the best time to plant a tree was 20 years ago. The second best time is now. Start small, stay consistent, and watch your wealth blossom over time. If you have any doubts or need personalized advice, don't hesitate to reach out to a qualified financial advisor who can guide you based on your unique circumstances. Remember, knowledge is power, and the journey to financial freedom is best traveled with expert guidance.